10 best places to invest in real estate in Europe today. Today, we take a look at 10 best places in Europe to invest in real estate. Like the property market around the world, those in Europe have their own high pockets and sluggish growth. These markets have the highest return on investment and with potential rental would yield capital gains. Before you begin, please subscribe to our channel and turn on notifications to get updates when we release new content. Number 1. Budapest, Hungary. Not sure we know of any city in Europe much finer than Budapest. Budapest is wrapped in the culture and history of Hungary. From the neo-Gothic splendor of the Parliament's building to the comfort of its legendary ruined bars, Budapest carries charm on every turn of its city. The restaurant serves Hungarian dishes and the thermal spa makes it a perfect winter destination. Locals can enjoy open-air pools, lift trolls on Margaret Islands in the center of majestic Danube. Low-cost airlines serves the Liszt Ferencváros Airport, and this encourages many tourists to visit the city, which in return boosts the short-term and rental market. The apartment in Budapest is 5 times cheaper than in London and Paris. A combination of classic apartments, a huge foreign investment, and a growing number of tourists, and a weak local currency makes Budapest a great destination in Europe. Number 2. Malta. Do you know of any cities in Europe that are highly affected by the global financial crisis? Malta is one of them. Sound banking and old age investments have contributed to the success of Malta in this domain. This helped it escape the financial crisis that struck Europe a few years ago. Other countries still recover in the real estate sector, while the Maltese real estate market is one of the only countries experiencing a steady financial growth. International buyers have been seen to flock in their numbers, and this has held an appreciation to the industry. There is no inheritance tax, no gift tax, no wealth tax in Malta, which is serious additional advantages. There is only a stamp of duty of 5% to be paid on transfer of Maltese real estate and transfer to certain shares in Maltese companies. This picturesque island off the northern coast of Italy is also well populated due to tourism and business sector. Furthermore, non-EU citizens can obtain a Malta residence permit by purchasing a qualified property in the country. Becoming a resident of Malta will allow you to enjoy visa-free access to the Schengen area. Number 3. Bucharest, Romania. The property market has appreciated in Bucharest for the past decade. Investment trends show how strong the property market is, and favorable tax rates gives more reasons as to why to buy property in the city. This largest city of Romania has witnessed a construction boom with new residential units appearing since 2014. Among one of the biggest, dynamic, and most prosperous cities in Eastern Europe, the city is constantly changing, with large multinationals changing in cityscape, increasing the demand for office spaces, especially on the northern side of the city. The city center, where the major learning institutions are, is full of students and an unlimited supply of rental apartments and places of entertainment. Also, the Romanian capital is a meeting point for many nationalities, thereby having a higher number of expatriates compared to other European capitals. Consider all this, the property market in Bucharest is one of the most promising, with so many growth prospects, making it one of the cities to invest in. Number 4. Barcelona, Spain. Barcelona is one of the top picks for expats while visiting Europe. It has always been a focus to international investors, and the people there enjoy culture, art, sport, and cuisine. Rental in Barcelona has generally stabilized, and the sales market has been very active over the past years. Fastest property selling fall between 400,000 euros range. A substantial number of properties sold this year were bought on a cash basis. There have been a majority surge in the number of buyers from the Middle East and the United States of America, which prefer contemporary lock-and-leave homes. Interest from the British is still high, and the number of Spanish buyers is on the up, reflecting growing confidence in the market from locals. Keep in mind that the final closing price of property is an average of 7 to 12% below the quoted price on real estate portals. Number 5. Berlin, Germany. One of the most dynamic cities in Europe, Berlin has an unusual good lifestyle pedigree, which includes hundreds of art galleries, along with museums and concert halls. Combine these with ample parks, green spaces, and navigable waterways, you have an ideal city to live in. The capital city of Germany has come under significant pressure with a little supply and a high demand, and this has favored investors in form of rising prices. As per industry estimate, there is a requirement of 11,000 residential units on an annual basis, but the actual construction is limited to just 6,500 units on average. This has led to an increase in rental and followed by an increase of 15% of first-time buyers. Russia is the biggest investor in the German property market, followed by Italy, Greece, and France. Number 6. Zagreb, Croatia. Zagreb is an extremely gorgeous city that dates back right to Roman times. It is expected that real estate in the area would see an appreciation in the next couple of years. In 2018, while the rest of the world would experience an increase of 8.5% in the asking of price of condos, the capital of Zagreb saw an increase of 20%. In 2019, Airbnb homes located in the city increased by 30%, indicating a surge in vacation rentals. This spike, however, saw a halt in 2020. Following the COVID-19 pandemic, there has been less demand for Zagreb property in the heart of the city. However, supply is still going steadily. This has led to a fall in prices for about 10%. In 2020, the sales in real estate dropped by 22% from the previous year. Number 7. Warsaw, Poland. After seeing excessive damage during the Second World War, the city of Warsaw has been reborn. Since the 2008 economic crisis, the housing market has grown exponentially as compared to neighboring cities. Talking about Warsaw does not only limit us to the town of Warsaw, but also the Polish business. Property demand here is always high. The pandemic has not caused the price reduction on the primary market. On the contrary, sales of flats in Warsaw alone have increased by 15.7% in the last 2 years, and nothing indicates a change. The average price per square meter reached a record of 2,400 euros. There are still more and more people who are just starting their search for real estate. Take a peek at Warsaw and you might be amazed. Number 8. Prague, Czech Republic. With a population of over 1.3 million people, Prague is one of the most populated cities in Eastern Europe. Every year, it attracts thousands of tourists who visit the city alone to enjoy its historical scenery. The classic building dates back to Renaissance times. With a rise in the number of tourists comes an increase in demand for rental properties. This has attracted an increase in the number of investors looking to capitalize on this opportunity. Moreover, the country's economic stability, both in terms of the local currency compared to volatility of dollars and euros following the economic crisis, the property market was able to withhold the drop of the prices during the COVID-19 when other areas of the economy were struggling. Low interest rate and uncertain situation are leading many to look to property as an alternative form of investment. The relaxation of the Czech National Bank rules regarding to the provision of mortgages and abolition of the country's real estate acquisition of tax further drives up the demand. Number 9. Bratislava, Slovakia. Bratislava combines beauty, the progress of a modern city, and a great location. It's just an hour drive from Vienna. From the last couple of years, the real estate market has skyrocketed. Despite the pandemic, the number of new building apartments sold in Bratislava increased by a third on a year-to-year basis. Apartment sale prices have always reached new heights. The average unit in Bratislava is recently just under 3,000 euros per square meters. It is expected to continue with this upward trend as more and more people get drawn to the city. Compared to the neighboring cities such as Vienna, Bratislava offers relatively attractive yields for property investors. Also, the fact that Bratislava and Vienna are the closest cities in Europe and the presence of a railway network between them will bring people together and is also to integrate both real estate markets. This would be an opportunity that no investor would want to miss. Number 10. Batumi, Georgia. Located between Europe and Asia, Batumi is the third largest city in Georgia and the second most visited places in the country after Tbilisi. Investors and developers have developed this city in recent years, trying to maximize the opportunity. There is an ever-increasing number of tourists and entrepreneurs willing to set up in the area. This has allowed the city to grow in the housing market. In Georgia, there is no restriction on ownership of real estate. There are no restrictions for transferring the proceeds of return on investment back to your country. There is zero real estate tax about owning property in 2 years and a 20% capital gain tax if you sell it within 2 years of ownership. Thanks for watching. Do not forget to subscribe to our channel and turn on notifications to get updates on new content.